Hey podcast, we decided to do a little bit of a Q&A. These are some questions that come in periodically. We've just kind of kept track of them. Some of them are my clients, my insureds that just ask questions. And some people just call and ask questions that aren't my insureds, and that's fine too. Sometimes it doesn't work out or whatever, but I want to offer good sound advice anyway. So we're going to go through some of those questions if you want to go ahead.
How do I know I'm getting all the best discounts?
How do you know you're getting the discounts? You really don't. Some companies with marketing will talk about them on like commercials and things like that because they want you to inquire about them. And they're not. I don't think any of them are bad. How could a discount really inherently be bad unless it could in turn hurt you? Which in some cases it can. There's something called a telematics discount, which is those plug-in devices that track your driving, among other things. Most of the time they're tracking some of them are an app, some of them you literally plug into your phone. Some of them you just sign into your app and it tracks you. But you're looking at how many miles you drive, probably over a month or something. They do the math on it. Some of them you keep them in forever, and some of them are just for a month or 3 months or 90 days or something. So how many miles you drive, time of day. Usually, all companies are different, but usually midnight to 4 a.m. is kind of a no-no. So if you're typically out in those times, you probably wouldn't want to do that. But the other one would be hard accelerations, like flooring it and then slamming on the brakes, basically. Obviously, the brake one you can't control all the time. And not to say that if you're driving up down Grand Central, that's going to happen. Red lights, other people, and that's okay. If it happens all the time, that's when it turns into an issue. Right. Now, some companies can use that data and raise your premium. That happens. You just need to ask your agent. Some companies will never raise they tell you at least, they'll never raise your premium based on that data. It's only a discount. So there are companies that do both of those. So that's one thing. But the big discounts are going to be multiple car discounts, which just happen. Multi-line discounts, which just happen. Some companies you might ask your agent about is homeowner. Like if you own your home, but you don't necessarily, it's not a package, it's not home and auto together. Some companies will still give you a discount for that. So that's one you may ask for. Low miles, if you don't drive a bunch, you may ask about that discount. And then when you get into useful drivers, it's obviously the school discount, the good student discount, driver's ed, things like that. But really just got to ask. It's hard to even research that stuff. I don't know that they put it all out there, but the telematics is becoming more and more prevalent. And then the other one would be the homeowner one, because that could be significant.
All right. How do I know my agent is getting me the best rates?
Okay, so again, you don't. There's two different kinds of agents. There's something called captive agencies, which are basically franchise agents, which means they represent one brand. They market with one brand. The brand usually markets for them. Everybody's heard of them. They spend billions of dollars on the internet. They spend billions of dollars on TV commercials. Everybody knows these brands. And if you have an agent that represents that brand, that's all they do. So as far as the best rate, they only have one rate to give you. I mean, they could play with things and make things more expensive. Hopefully that's not happening. But they only have one brand to show you. So there's the captive, which is a franchise model. They're quote-unquote self-employed agents, but they have to do everything the mothership tells them to do. Which, not that there's a problem with that. It's just the way it is. So if they tell them, hey, we're going to start selling pens and pencils, they're going to start selling pens and pencils. I mean, it's just by nature, that's how it works. Some of them have hundreds of products they're supposed to sell. But they just kind of have to follow that lead. So you're going to probably get their best rate. Independent agents, like myself, have several companies. Some independent agents only have a few, like 2 or 3. I've got a bunch. So what I do is I have something called a rater, which is a piece of software. So I just go in there and put your information in, and then it rank orders the quotes, however you want them. Mine's sorted, lowest quote is at the top down to the highest quote. And those aren't exact, they're ballparks, so you gotta do a little further research to get a hard number on it. But what I do every time, and I'll turn the screen and show people if they want to see it, is I just go with the best deal. Now, is the best deal the lowest premium? Not necessarily. There may be some nuances that someone's looking for. For example, not all companies do $0 deductibles for like comprehensive. Some companies may only go to 100. Well, if someone wants 0, I may have to go a different route. You know what I'm saying? So, is it the absolute lowest price? No, but it's also not what they want, and it's not the coverage they want. So, I can't say as an absolute it's always the lowest price. Plus, you got to look at the home too if it's involved. You know, I may be higher on your car, but I'm cutting your home in half, and the math says that the whole package is lower. So, there's a lot to it, but hopefully, your independent agent is literally putting you in the best place for you. That's what I do. I don't care about bonuses and all this other stuff they have. I don't even know how it works. I just go with the best place for my people. So, and then, of course, if they ask me, I'll check again. You can't check everybody all the time. That's all you would do. So, but as things come up, I do check renewals, and if there's some sort of change, I'll investigate that and maybe shop it around again. It just depends. Sometimes when you buy new cars, say you started with me with some older cars and you traded up, it just happened the other day. I went from an 04 to a 14, It's just rated differently, so that company may no longer be in his best interest, so it may be better somewhere else. So to answer the question is how you know your agent's giving you the best deal, you don't. Hopefully you trust them. In that they're looking out for what's in your best interest.
Okay. Say someone is going on their own for the first time. What are some things that they need to look for?
Like a young person? Or?
Yeah.
So that's tough because there's a lot of life that's happening usually in that time frame, whether they're in school, whether they're not in school, whether they're starting, full-time employment or not, renting, owning. There's just a lot of things changing, and the rates are just flat out higher for younger drivers. It is what it is. They're statistically more likely to have issues. So the question was what to look for?
Yes.
The discounts, if you're in school, the good student discount can be significant in some places. It's typically a B average, I think they call it. So on a 4.0 scale, it's 3.0 combined. Usually like it's your most recently completed term, so if you're in college, most likely a semester. And it can follow you afterwards in most situations, like say you're done with school. That you can still get that discount for a little while in a lot of situations. Driver's Ed's another one where if you took Driver's Ed, a lot of companies will honor that to like age 21. So those are things you may bring up when you're asking for a quote. Hey, I took Driver's Ed in high school. Can that still help me? Or I'm still in school. Can that still help me? Or I just finished school. Can I throw that in? Generally, insurance companies want to know who's in your household anyway. So if you're still at home, that's just something you talk. That's like a case by case thing. Some companies are going to want everybody on there no matter what. Some companies may say, okay, I'll insure you at 20 on your own, but I just need to know who's in the household and that they have their own separate insurance. But you're going to want to look for as many discounts as you can. The other thing would be the type of car. Lending's kind of crazy. It seems like they'll give a lot of people loans and they can afford the car payment, and that's fine. And some people go out and get a much newer car and don't think about the insurance. They're sitting at the car dealership and they slide the paper. All right, we got you approved at $400 a month. I can afford that. Yeah. Perfect. And they don't think about the insurance because they've got a 1995 Cavalier that has just liability on it, and they're not thinking about it. Well, then they go to switch cars, and the insurance is expensive. Well, now the whole thing's unaffordable. So that happens quite a bit, where people don't think about those things. So I would go get a quote on your insurance with your agent or with whoever else in a car buying process for sure, especially for younger people that are kind of going out on their own. Um, my suggestion would be drive an older car as long as you could, I guess.
If my car is totaled, how much will I get?
Okay, so total loss claim question. Obviously at the car lot they're going to talk about gap insurance when you buy a car, and that's a good product. You should listen to them. I'm not saying you should buy it every time. You should listen to them. You can't buy it. You have to be within so much of the value of it anyway. If you have too much equity, you can't buy it. Which would pay off the car in the event of a total loss if the insurance, would pay the difference what the insurance paid and what you owed. So number one, keep that in mind. Number two would be to answer the question, what they do is they look at a couple things. The answer is yes, they're going to try to lowball you. You can get mad if you want, but I'm an insurance agent. I've hit a deer and totaled my car. I'm the agent. They lowball me. That's just, they don't care. They don't care that I'm the agent. It's not like they're taking care of me. So, but through some research, I would research the value of the car through like Kelley Blue Book or NADA to see what the different values are. I would research the market. Say I wanted to go buy that car in the marketplace, your make, miles, and everything, your make, model, and similar miles. What's it going for? I would use all those retail numbers talking to the insurance claims person, and I would hopefully be around those numbers, whatever those numbers are. I mean, if you're $5,000 below, then there's probably an issue. So if you look at the values of those things, it's called actual cash values. What it is they're doing. So it can be lower than those values, but if you're in the neighborhood of those values, I think you're doing good. One thing they're going to try to do in a total loss, if they know it, is they're going to say, we'll send somebody out and write you a check on the spot. Not always the greatest idea, because that closes the case. So if it's not a total loss, it's just damaged. But, they're not mechanics. So they're going to look at different things, punch it into their formula and say, all right, I'll give you a check. Well, what if there's more wrong with it? I always tell people to take it to a shop and have it looked at. People will look at it for free. That way you'll know.
Okay.
But if it is a total loss, I would look at the values of the vehicles, do your own research, and you should be in somewhere in that neighborhood.
What if I can't afford insurance?
Like my scenario of buying the car
Yeah.
and not thinking about it. That would be the first thing, is to do your due diligence and shop for it. Or not necessarily shop for it, but if you have an agent that you like and trust and you think you're getting a good deal, just go talk to your agent and say, this is a car I'm thinking about buying in that scenario. Because you might find a different car and the whole package will fit. That's one common scenario of quote unquote not being able to afford it. The other scenario would be people that have issues on their driver's license or accident or loss history. That's where they can afford it, and then something happens, and now it's unaffordable. So I can't emphasize, like, the cell phone thing is a big deal. I see it all the time. Tickets. They're looking for it. It's a big deal, and it's not safe. You try to avoid that stuff as much as you can. The speed thing, I understand some places the speed limits are super low, but depending on who you are, depending on your age, those things, someone like me, a speeding ticket probably wouldn't affect anything. A youthful person, it's bad news. A speeding ticket. Accidents are bad. Those are not all unavoidable. I get it. Comp like deer and stuff. What are you going to do? It is what it is. But they don't rate those as, they're not going to hold that against you as much as 25 over the speed limit or, an at-fault accident. The other thing, talking about affordability, long term that people can do is work on their credit. insurance companies all use something called an insurance score, which is it's not your credit score, but it's factored in by your credit score. So do what you can. Credit is just becoming more and more important in a lot of things. Certain employers check your credit to hire you. Obviously, lending has tightened up in the past, I don't know, 10 years or something like that. So homes and cars and things like that has tightened up where credit's more of a factor. So it's absolutely a factor in insurance, and they all do it. So some companies are a little more open about it, I guess, as far as what you have to sign off on. Some companies make you sign off on that, some companies don't. But credit's absolutely a factor, and that's definitely something that when you're young, you don't really have any credit history, but if you dig yourself a hole early, you charge back a car early, you get upside down on a credit card that you don't pay on early in life, that stuff takes forever to come back from. So, mostly because your hope is the behavior is changing. I'm not saying you can't pay that off and your credit increase, that can happen, but if you start those behaviors young, it's probably not going to change. So that's another thing that throws people out of affordability, because they might say, well, I'm just having liability coverage in this car, why is it so expensive? Well, credit's one of the factors. And we'll probably go through a different question on the rating factors because there's a ton of them.
Are there any other tips not to raise your insurance, or how to not?
Well, I mean, those kind of things like the credit and staying clean on stuff help. One thing I've noticed, which is probably, I don't know if it's illegal, it's probably quite unethical, is some people will throw in other people on their policy. Not customers, but agents. I don't know that all customers understand that. That's why I say that. If I'm young, or say I don't have great credit, I can throw someone on my policy that does. My rate will absolutely go down, without a doubt. I just had a guy in here the other day that left me. I insured him for a while. His rates were good, but he got a new car, and I don't know how he got to this other agency, but he brings me the insurance. He brings me the insurance card to I don't, he didn't have to, but he did, to cancel his policy with me. And I look at it, and I know he lives alone. I asked him. I mean, I wrote the policy before. I know he lives alone. And then there's another name on there. I was like, who's this? A buddy of mine. I'm like, well, does he live with you? Like, is his, not like on the couch, but like, does he literally live with you and have his driver's license there and stuff? He said, no, he's got his own place. Okay, well, why is he on your insurance, And there's a coverage question maybe later about who's covered. He would be covered to drive your car regardless. It's probably not a great idea if he just drives your car all the time, but that's one of those things where people shouldn't be doing that, because, say he does something that could screw your insurance up. That's probably an unethical way to lower your insurance. But if you do have people in your household, they should be on there. Most likely, you got to talk to your agent. And as an independent agent, it's company by company. Some of them, like I said, want everybody on there listed, driver, because the likelihood is if you're in the same house, it's possible you drive that car.
Yeah.
But then some companies say, it's okay, they can be, we just want to know who they are, and we may even want to know who they're insured with, or a copy of it. But as long as they're insured, it's okay. So that's a conversation, really, with the agent.
So who is covered underneath my policy?
Well, household drivers that are listed as drivers on your policy. There's policy ownership, which they can do things with the policy. And then there's listed drivers, household drivers. So in a typical family, scenario, mom, dad, couple kids that are driving age, for example, they should all be listed as drivers in the household. People that live together, I mean, there could definitely be a gray area as who should be listed there. But if you're in the household you live there, you should be listed. Now, as far as who is covered, anybody's really covered that you let drive your car. You know, you can let me drive your car. I get to an accident, it's okay. Your insurance will pay if they're at fault. If I'm at fault, excuse me. They're going to want to know what's going on probably. Hey, who's this Nathan guy and why is he driving your car? And you'll tell them. He just had to run to the store, whatever. But technically that's everybody's covered in that scenario. Now, there can be scenarios where insurance companies will go through what they call an exclusion. Say you decide you want to get a bunch of tickets or whatever, and mom and dad's insurance goes up. The insurance company can say, okay, we'll insure you, but she's out.
Yeah.
You know, and they'll make you sign a letter so she ain't driving our cars. And that's okay too. You know, you go somewhere else at that point. You would, not them probably.
Yeah.
But they could, but they'll pay more. So really anybody's covered that you get permission to drive your car. Insurance follows the vehicle, not the person. So if I drive your car, it's not my insurance. It's my driver's license. I get a ticket, my driver's license. I hit somebody and it's my fault. My driver's license if I get cited, but your insurance. So you got to be careful who you let drive your car. But the insurance definitely follows the vehicle, not the individual.
Right.
The only time that the individual, and this isn't really insurance, I guess, kind of is, but is AAA roadside.
Yeah.
That's an individual thing. So I could drive your car, get a flat tire, and I call AAA roadside. Even though you're not a member, maybe I am, but I could still do that. But regular old car insurance, it follows the vehicle. So really whoever you let drive it, but I'd be cautious of that because it is your insurance. Your rates are the ones that are going to be affected, not, well, it could be theirs too if they had their own car insurance because then they would have an incident on their record. But yeah, it's definitely your car, your insurance, and like I said, it follows the car. So whoever you let drive, it's technically covered unless they're excluded on the policy.
Okay.
Anything else for today?
That's it.
Cool.